Hi and welcome to this Blueberry Markets update. I'm John Kibler, Head Currency Analyst. In this video I'll be taking a closer look at the US dollar index as recent weakness may be coming to an end. Despite talks of higher rates from the Federal Reserve, the US dollar index continues to trade lower following a recent federal funds rate decision. The Fed hiked interest rates by 25 basis points, bringing the federal funds interest rate up to 4.75% to 5%. During the press conference that followed, Fed Chairman Jerome Powell was asked if pausing rates were discussed, to which he replied yes. This caused the US dollar to weaken significantly against all major currencies. Although Powell did go on to say that the Fed needed to raise rates higher, they would do so. US 10-year bond yields and US dollar index are generally positively correlated. When the 10-year bond yields increase, it usually indicates that the market expects higher economic growth and inflation in the future, which can lead to higher interest rates. This can cause the value of the US dollar to increase relative to other currencies, leading to an increase in the US dollar index. Conversely, when the US 10-year bond yields decrease, it can indicate lower economic growth and inflation expectations, which can lead to lower interest rates that can cause the value of the US dollar to decrease relative to the other currencies, leading to a decrease in the US dollar index. Currently, the US 10-year note bond yields are at 3.5%, and looking at the chart, we can see that the last time bonds were at this level, yields moved higher. The 10-year yield is used as a sign of investor sentiment in the economy. When comparing the US 10-year and the US dollar index, the correlation between them is very strong, which could give us some insight into what could happen next for the US dollar index. Looking at the chart here, we can see that the price has been trending downwards after finding resistance at the 105.50. So if I just take a look at this daily chart, you can see 105.50 here, or all these highs back through there and all these lows. Price came up into that resistance level alongside this longer term trend line resistance and failed to climb above it, and instead price has moved to the downside here. So looking to see if that's going to reverse now, because we just looked at the US 10-year note bond yields and you can see that they're at 3.5%, and the last time they were there they rallied. If we've got that positive correlation, we could see the US dollar index start to move higher as well. So if we're looking at the daily chart here, you can see that price has come down into a key area of importance. If I actually go up to the weekly, that is the open of this large bullish engulfing candle through here. So I quite like the opportunity that price is coming back into a weekly demand zone. So typically if I was expecting buyers to start coming in at this point now, I'd be looking at the likes of my 4-hour time frame, and I'd be looking to see if price would start changing trend here or forming some very common trading patterns that you may have heard of. So we could be looking, for instance, for the double bottom pattern where price forms that higher low or the equal low and then continues to push to the upside. We could also look for the inverse head and shoulders pattern where price begins to form that higher low after forming the head, which could go beyond these lows over here, which could then sort of grab the liquidity maybe before price trades back to the upside. The only thing I'd say right now is if I look at the hourly chart, we're actually at an area of importance at the 102.58. Those are the kind of pullback highs after that downward move from Powell's press conference. Now, if price breaks above that and closes above that, I think that would lead to a move back up to the highs before the event, so a move up to the 103 area in here. However, if we reject here, we could be looking for that double bottom pattern to form on our 4-hour time frame, which could lead to obviously a larger move. Now, if we just look left, you can see why this is such an important demand zone, because look how aggressive the buying got at this area. So that's a good sign that maybe buyers are sitting around these areas, and if price comes into them, then buyers may step in again. So keep an eye on your US dollar index, keep an eye on the US 10-year bond yields as well, and the supporting key zone around about this 102 level, as they could provide further insights into the direction of the US dollar index. And if you did like this video, please leave it a thumbs up, subscribe to the YouTube channel to see some more of our Forex trading content, and I'll speak to you in the next video.